We often think about global shifts, big picture stuff, strategies, politics. But lately it feels like these massive changes are hitting much closer to home. Yeah, absolutely. Like the tech you use, right? Or prices in the shops. Could that actually be tied to these huge global events? It's definitely looking that way. We're diving into a whole collection of recent information today, trying to piece it together, right? Trying to cut through the noise, figure out what's actually significant in all this. Exactly. What's striking when you look these sources is how connected things are. Events that seem separate, they're not. Okay, economic decisions over here cause immediate ripples like cascading effects elsewhere. So the mission today is what? Connect the dots. Connect the dots. Yeah. Pull out the key threads, show how they weave together, give you a clearer picture of this evolving landscape without getting bogged down in every single detail. A shortcut to being well-informed, sort of. Gotcha. Yeah. Okay.
Yeah.
Okay, let's start with something big in the tech world. China's push for technological independence.
Right, that's a major one.
Reports are saying that starting April next year, China's banning government agencies, big companies, from buying U.S. chips. We're talking Intel, AMD, Micron.
That's the plan, yeah. And the market reaction was immediate and pretty severe.
Severe how? I heard Intel took a massive hit.
Massive is right. Reports suggest a $100 billion drop in their market value in just 2 days.
Wow. $100 billion.
Yeah. And you have to understand, Intel relies heavily on China. Like 27% of their revenue in 2024. That's about $22 billion came from China.
Okay, so this isn't just a small bump in the road for them.
No. It's a significant blow to their bottom line, their future plans. And it signals China's clear strategic goal. Less reliance on U.S. tech, especially in critical areas.
Critical areas like?
Public systems, energy grids. They want U.S. chips out of those completely by 2027. That's the reported timeline.
It wasn't just Intel feeling this, right?
Yeah.
The whole U.S. chip sector felt it.
Oh, yeah. It dragged down the semiconductor indexes, the SOX, the SMH. Yeah. The whole industry felt the pressure.
And some experts are predicting huge losses down the line.
Some forecasts are really stark. Potential revenue losses for U.S. chip makers. Maybe up to $350 billion by 2027.
That's staggering, a seismic shift, really. But how is China actually pulling this off, making this tech leap?
Well, that's the really interesting part. The information suggests Huawei has made some serious breakthroughs.
In what way?
Advanced chips. They've reportedly managed to produce 5-nanometer chips.
Okay, 5 nanometer. That's tiny, super advanced tech.
Exactly. And the kicker, they supposedly did it without needing EUV technology, extreme ultraviolet lithography. That's the really cutting-edge stuff everyone thought was essential.
Just have found another way, independently.
It seems so. Achieving that level of production on their own, it's a major step. Suggests that tech gap might be closing faster than many thought.
Right. And if they can do this for smartphones, what about other areas? Servers, cloud computing, AI?
Precisely. That's the big question. It looks like a direct challenge to the U.S. tech dominance in those really crucial high-value fields.
So how does this filter down to us?
Yeah.
To everyday consumers?
Well, probably through prices. Your wallet. We're already seeing reports, HP, Dell, computer makers announcing price hikes, around 12% to 17% on some devices using these chips.
Because the supply chain is changing.
Exactly. These adjustments, this broader tech decoupling, it's likely to mean higher prices for a whole range of electronics. Adds to the cost of living.
Okay, let's pivot slightly. Another big economic trend popping up in the sources, Chinese investment in the U.S., or rather, the lack of it.
Yeah, the decline there is dramatic.
How dramatic are we talking?
Well, think about this. In 2016, it was reportedly around $46 billion. By 2024, just $2.3 billion.
Right, it's a cliff dive.
And now, reports suggest it's practically near zero. Talk of an actual investment freeze.
Why? What's driving that pullback?
The sources point to a strategic shift by China, redirecting capital, investing in regions or projects they see as more aligned with their, long-term interests, geopolitics playing a big role.
And this is having real effects here on U.S. businesses.
Tangible consequences, yeah. There's one example mentioned, Hartwell Tech. Apparently lost $180 million in expected funding. Had to take out emergency loans.
At high interest rates, I bet.
Very high, reportedly 11.3%. That really shows the kind of financial strains some companies are suddenly under.
And when businesses face higher costs like that,
it often gets passed on. Higher prices for consumers, it's another factor pushing things up.
We're already hearing about tariffs adding to household costs, right? Almost $2,000 extra a year for the average family, some estimates say.
That's what some reports indicate, yes. Combine that with mentions of falling S&P 500 profits, ongoing inflation around, 3.6%, it paints a worrying picture.
And it's even hitting major projects, big revitalization efforts.
Seems like it. Things like Intel's big chip factory plans in Ohio, other battery projects, robotics. Reports say some are paused, maybe even canceled. Why? Lack of that expected Chinese funding?
That's significant.
It is, and then you hear that something like 62% of U.S. manufacturers are reporting financial shortages that threatens jobs, stability.
And it's not just China pulling back investment.
No. We're seeing reports of rapid capital flight more broadly, like $120 billion pulled from U.S. stock ETFs in just 90 days. Other countries, Norway, Japan, reportedly reducing investment too. It suggests a wider shift in, let's say, global investor confidence regarding the U.S. market right now.
And there's this huge wall of business debt coming due soon.
A massive one, $4.1 trillion by 2026, according to the sources. And companies are relying more on high-yield, riskier debt junk bonds, basically, paying around 9.6% interest.
Okay, so definitely some economic turbulence. Let's shift gears a bit to the political side. Lots of noise there, too. Reports about Alexandria Ocasio-Cortez giving a speech out in Idaho, taking aim at Donald Trump.
Yes, that speech generated some headlines. What seemed notable in the reporting was her focus on, tangible consequences.
Like what specifically?
She apparently brought up his convictions of the criminal fraud counts, the civil liability findings, questioned who really benefits from his tariff policies, suggesting potential insider advantages.
And concerns about rights and freedoms, too.
Big concerns, yeah. Reports mentioned her citing examples, detained activists, censored students, minorities being targeted, framing it as a potential threat to constitutional rights under his leadership.
She also hit on that theme of, wealthy elites and corporate power running the show.
Exactly. Criticizing a system she sees as dominated by them, pointing to things like reported cuts to Medicaid or veterans' benefits happening alongside tax breaks, for billionaires mentioning Elon Musk and SpaceX specifically.
And this message seems to be hitting a nerve. There was a big rally mentioned in Salt Lake City.
Apparently quite large. Around 20,000 people showed up for a rally with her and Bernie Sanders, which, for Salt Lake City, that's roughly 10% of the population. Pretty significant turnout.
Especially in a place often seen as more conservative. What was the focus there?
They were reportedly rallying against what they called the Trump-Musk regime. Bernie Sanders was quoted describing the current moment as maybe the most politically dangerous time in history. Really strong language.
Wow. High stakes.
Very much so. They also reportedly criticized local Utah politicians like Senator Mike Lee and John Curtis for cutting social benefits while lowering taxes for the super rich, tapping into that inequality narrative again.
And reports suggest rising protests generally, people feeling basic rights are being eroded.
That seems to be part of the picture presented in the sources, yes. A sense of unease and mobilization.
Okay, now linking politics and economics again. Europe seems to be pushing back against the U.S., specifically targeting the auto industry.
That's right. It looks like a direct response to U.S. trade policies.
What are they doing?
Well, Germany reportedly froze certification for U.S.-made EVs, citing data and emission standard concerns. France is said to be imposing carbon taxes on American heavy-duty vehicles. Denmark apparently ended EV subsidies, but only for U.S.-made ones.
Ouch. Targeted actions. And Wall Street noticed.
Immediately. Stock prices for Tesla, Ford, GM reportedly plunged, wiped out over $100 billion from the U.S. auto market value, according to the reports, very quickly.
And Tesla's plans in Europe.
Put on ice, it seems. A huge $31.4 billion investment plan is reportedly frozen. There's even talk they might abandon Europe entirely, shift focus maybe to Southeast Asia, India, Vietnam, Thailand.
Then they're actually seizing vehicles at ports.
Delaying them, yes.
Okay.
Reports mention over 12,000 U.S.-made EVs stuck at EU ports. It's a pretty strong signal.
And the jobs impact here.
Alarming figures reported over 200,000 job losses in the U.S. auto sector in just 3 weeks.
3 weeks, that's incredibly fast.
It highlights just how disruptive these international trade spats can become, especially in a core sector like manufacturing. The ripple effects are quick and severe.
It definitely feels like recent trade policies are sparking a major global backlash.
Absolutely. The announcement of Liberation Day, as it was termed, and imposing tariffs on, seemingly everyone, EU, Canada, Australia, UK, even the Penguin Islands were mentioned, somewhat bizarrely.
Using a specific formula.
Yeah, based on trade deficit and export volume. Indonesia was cited as an example of how it works, but the reaction has been pretty much universal condemnation from global leaders. Ursula von der Leyen, Anthony Albanese, Mark Carney, all reportedly critical.
And economists are worried.
Very. Professor Scott Lucas reportedly predicted the average U.S. tariff could hit 29%. That would be the highest since the Great Depression. The potential global economic damage, estimated in the trillions, maybe $1.4 trillion.
Even some Republicans are concerned.
Senator Rand Paul was mentioned, reportedly warning about the political fallout from these tariffs, damaging alliances, hurting the economy.
And our countries actually changing their behavior, moving away from the U.S. orbit.
We're seeing signs. Canada reportedly exploring trade deals with China and India, specifically aiming to move away from relying on the U.S. dollar.
That's a big deal.
It is. And reports also mention a significant sell-off of U.S. long-term bonds. That suggests capital heading for the exits.
And major banks are sounding alarms.
Goldman Sachs reportedly warned about a potential U.S. economic decline, maybe another 0.8% in Q2 2025, and risks of a broader global crisis stemming from this.
The international language is getting sharp, too.
Quite pointed. A Japanese official, Shinji Yaguma, reportedly called the trade tactics extortion by juvenile delinquents.
Wow.
Yeah. And apparently mocked the understanding behind the tariffs, too, suggesting they're poorly thought out, damaging, really highlights the frustration out there.
Okay, so amidst all this economic storm and international friction, what are the sources saying about President Trump's own messaging, his social media?
Well, the portrayal is one of perhaps a disconnect. While economic indicators look worrying, and reports say a majority of Americans, 53%, believe the economy is getting worse.
His posts are optimistic.
Largely optimistic,
Yeah.
which has drawn some sharp criticism. Commentators like Dara reportedly used incredibly harsh language, comparing him to a destructive force, using terms like malignant narcissist, sociopath.
Strong words.
Very strong. Darrow also reportedly expressed just bewilderment that Trump maintains his support base despite everything. Even made a comparison to the Emperor from Star Wars.
Okay. And late-night hosts.
Kimmel, for example. Comedic commentary, obviously, but reportedly highlighting things like an AI-generated image Trump shared of himself with a lion, making jokes about diapers, pointing out golf trips during crises. It taps into that perception of being out of touch or focused elsewhere.
And another potential economic hit mentioned Boeing.
Yeah, a report surfaced that China ordered its airlines to halt deliveries of Boeing aircraft. If true, that could mean a potential $12 billion annual revenue loss for Boeing, another major U.S. company facing headwinds tied to these geopolitical shifts.
Now let's look north, the relationship with Canada, traditionally very close allies. How's that looking?
Under considerable strain, according to these sources, a sharp decline reported during Trump's second term. Fueled by trade disputes, harsh rhetoric.
Including that reported suggestion about annexing Canada.
Yes, that was mentioned. And the reaction in Canada was reportedly unified and strongly negative. Across the political spectrum, Trudeau, Poilievre, Jagmeet Singh all rejecting it firmly. Public, too.
Even boycotts.
Reports of grassroots boycotts of American products, yeah. Showing the depth of the public reaction there.
And concrete policy shifts, too. Like with energy.
Definitely. Manitoba reportedly ended electricity supply contracts with the U.S., specifically Northern States Power.
Why? What was the reasoning?
Premier Wab Kinew cited sovereignty, economic resilience, wanting to prioritize Manitoba's own needs and national projects, like potentially supplying Nunavut or building a national energy corridor.
What does that mean for Manitoba Hydro financially?
Could mean lower revenues initially, maybe rate increases, but it's part of a bigger strategy. Canada seems focused on strengthening its own critical sectors like minerals and controlling its own resources.
And Alberta's doing something similar with oil.
Premier Danielle Smith reportedly pushing to diversify oil exports away from the U.S., focusing on markets like Japan, South Korea, India, Spain, investing in pipeline capacity to make that happen.
So Canada's actively looking for other customers.
Seems so. And interestingly, China is reportedly increasing energy imports from Canada while cutting back on U.S. sources. It's a clear realignment.
And Canada is, what, the biggest foreign energy supplier to the U.S. currently?
That's right. So these shifts are significant for U.S. energy security, too.
Even grocery stores are involved.
Purportedly, yeah. Canadian retailers started labeling American food products hit by tariffs, and consumers apparently responded by shifting towards local options, little things that add up to a bigger trend.
So the overall vibe of the Canada-U.S. relationship is changing.
It seems to be shifting towards something more transactional, less based on assumed closeness, more on calculated national interest, Canada focusing on diversification, resilience, less intertwined perhaps.
Okay, one last major development mentioned in the sources. a plan to revive U.S. shipping.
Yeah, this is an interesting one. Reports say the Trump administration is considering buying foreign ships.
Buying foreign ships to expand the U.S. fleet.
Exactly. Rapidly expand the civilian shipping fleet. The goal reported is hundreds of new ships within 5 years, trying to counter China's dominance in maritime transport.
There's a big gap there, isn't there?
Yeah.
Between U.S. and Chinese shipping capacity.
A huge gap in commercial shipping, yeah. So this plan is ambitious. It reportedly involves using local shipyards too, joint projects with allies like Japan, South Korea, Australia, but also just buying ships directly off the shelf, so to speak.
Any idea of the cost?
Estimates mentioned are in the range of $150 to $200 billion for maybe 300, 400 ships.
A lot of money. Any particular type of ship?
Reports emphasize LNG and oil tankers, so energy transportation security seems to be a key focus.
And how would they fund this?
Talk of public-private partnerships, tax incentives, a mix of approaches.
What's the reaction been? From China, for instance.
China's initial response was reportedly understated, but there's definitely skepticism mentioned about whether the U.S. can actually pull this off on that timeline at that cost.
But the administration is pushing it hard rhetorically.
Very strong rhetoric reported, yeah, about America's resolve, regaining leadership in shipbuilding, drawing parallels to massive efforts like during World War II.
Underlining the national security angle.
Absolutely. Arguing that a weak civilian transport fleet is a major vulnerability, though, as you'd expect, there's already debate reported within the U.S. about the cost, the priority, whether it's the best use of resources.
Okay, so pulling all these threads together, what are the main themes emerging from this deep dive?
Well, several big ones stand out, and they're all tangled together. You've got intense global tech competition, clear economic vulnerabilities emerging in the U.S., major shifts in traditional alliances.
Huge impact of trade wars.
Exactly. Disruptive, far-reaching consequences there. And just a fundamental rethinking, it seems, of long-standing relationships between nations. Canada's actions are a prime example.
We definitely hit on some surprising details. The speed of those market reactions in tech and auto. Intel's $100 billion drop, the auto job losses.
Yeah, and the sheer scale of the investment shifts, the capital flight, it really underscores how interconnected everything is and how fast things are changing right now.
And this isn't just happening out there, is it?
Not at all. These are not abstract trends. They directly impact your life.
Yeah.
The prices you pay, the stability of the economy you live in, the whole geopolitical climate. It's all becoming much more visible, more immediate.
So as we wrap up, what's the final thought for you, the listener, to take away from all this?
Maybe consider the long-term ripple effects. Where could all this lead? And in a world changing this fast, what does being truly well-informed even require anymore?
Constant vigilance.
Perhaps, or at least ongoing critical thinking, being open to learning, looking at different perspectives, because the future global order, it's definitely still taking shape right now. Lots to keep watching.